Hello everyone, hope you're doing alright and welcome to this first video. Well, not actually the first, but the first technical video on the A to Z guide. So in the beginning, this first video is on order blocks. In the beginning, you will have questions, you will have doubts on certain topics, etc, etc. This is completely normal. Write those questions down and they will likely get answered later on in the videos. Alright, so I wanted to start with order blocks. First off, we are going over every PD array. What is PD? Premium and discount array. Premium obviously being if price is high, it's in a premium and we are more likely to sell off. And if we are in a discount, for example here, discount, low prices, we want to buy in discount, we want to sell in premium. So when I refer to a PD array, I refer to a premium and discount array. If I'm looking for lower prices, I want to use a premium array. And if I'm looking for higher prices, I want to use a discount array. All right, so the first PD array I wanted to discuss is an order block. Now, the theory behind order blocks, obviously in the name, order block. There are orders inside that block. Whose orders are inside that block? Think of institutions. Think of central banks. Institutions have such large orders, they can't just simply press buy and sell wherever they want, like we can as retail. Institutions need to do the exact opposite of what price is currently doing to get into the market. So for example, and by the way, every up candle right here is white and every down candle is bluish black. So institutions are buying down candles simply because their orders are so large they can't buy on up candles. Institutions buy on down candles. Why? For every buyer there needs to be a seller. For every seller there needs to be a buyer. If we know there are willing sellers right here, who is buying those sell orders? Institutions. What do we create when institutions are buying those sell orders? Order blocks. All right, so let's get into it. How can we actually spot an order block? Again, some things might be a little bit confusing because obviously it's the first video. So go in with an open mind and don't expect to grasp every single thing right now. So we just explained the basics and the logic behind an order block. Of course, if you have a different logic and that logic works for you, please go ahead and use the logic. My logic might not be for you, and that's completely fine. If you have a different logic and you want to use a different logic, that's completely fine. I'm not here to force a logic down your throat or anything. My philosophy, etc., as said in the intro video, everyone needs their own logic, what makes sense to them. Everyone is a unique individual. So everyone needs their own unique logic, their own unique view on the market. So again, if my logic doesn't suit your logic, stick to your own logic. Perfectly fine. All right, so if we know institutions are buying in down candles and selling in up candles, then up and down candles could be order blocks, right? Correct. So let's go over a few criteria that an order block needs to have. If we are looking for a bullish order block, and note that down, a bullish order block, we want to see a down candle. A down candle that fits the criteria is a bullish order block. A bullish order block needs to come off of support. It needs to break the high of the down candle. Then that creates a bullish order block. If it then returns to that order block, we can possibly buy. Of course, not financial advice. And then here you can see the fourth is MT. MT stands for mean threshold. Mean threshold is 50% of the order block, and it's only the bodies of the candle, not the wicks. The bodies of the candle, 50% of that is mean threshold. So whenever I refer to mean threshold, it's 50% of the bodies of a certain candle. All right, now let's look at some different order blocks. For example, these two down candles. An order block doesn't have to be one single candle. It can be, but if there's multiple consecutive down candles or multiple consecutive up candles, it is one big order block. So these two consecutive down candles are one order block. Is it coming off of a previous support? Yes, we have a fair value gap right here. Now, you might not know what a fair value gap is currently. So if you don't know, write that down. We'll get into it in a later video. So these two down candles is one order block. We are coming off of a previous support level, this fair value gap. If this is the order block, what's the second thing we need? We need the high to get broken. What's the high of this order block? Since we can basically see this as a one big order block, this is the high. Now the next thing we need is a return and a new push away. This is the very basics of an order block, but the basics are important for you to master. People like to skip the basics, and this is why I said this A to Z guide is also for advanced traders. Why? Advanced traders a lot of the times forget these simple steps, and they are essentially ahead of themselves, and they forgot to master the basics. What makes someone a master is when they master the simple basics and they apply them on a consistent basis. Master the basics and you will master trading. All right, so we have 1, 2, 3. Support level, high gets broken, we have a return. Perfect. Then the fourth one, the MT, the mean threshold. The mean threshold would be this right here. Now, this is a little bit advanced. Now, why is the mean threshold important and why did I even mention it? If this order block does want to hold, I wouldn't want to see the mean threshold, aka the 50% of this order block, get disrespected. Disrespected meaning closing below the mean threshold. Now, for the open of the order block, why did I take this wick and not the body of the candle? The wick is overlapping with a fair value gap. Again, you might not know what a fair value gap is right now, so write that down. So the top of the wick, only the top of the wick is important to me right here. The top of the wick is overlapping with a fair value gap right here. And that's why I take the top of the wick. If this wasn't overlapping with a fair value gap, then I would have taken the body of the candle. Why? Well, if the wick wasn't overlapping with a fair value gap, for example, we can say, let's pretend that this is the wick right here, and it isn't overlapping with a fair value gap, the top of the wick, then the top of the wick is not the sensitive area. The top of the wick is already mitigated. So the unmitigated orders are right here in the body of the candle. Again, remember what we've gone over. A bullish order block is just down candles. A bearish order block is just up candles. But again, the context behind them, the steps, etc., those are important. And that's why not every down candle and not every up candle is an order block. The context behind them is very important. As well as, are they aligned with your bias? If you think price is going higher, and if price is going higher, then every up candle is not a bearish order block. And if you think price is going lower, so for example, this up candle, if price is in a bullish movement, this is not a bearish order block. Now we've just gone over a bullish order block. Let's dive into some bearish order blocks as well. So as you may have seen right here, try to spot all the bearish order blocks right here and what makes them a bearish order block. All right, so we are pushing lower after coming above this high, aka this wick above this high is a sweep of the high. What is basically happening right here? Breakout traders, so people with a buy stop that are buying when the high gets broken right here, will have a stop loss below this low, so price will target the opposite side. Now, if we know this and we are sweeping this high, then we have a bearish bias. All the up candles that are forming when we have a bearish bias will act as an order block, and these up candles will more than likely hold a lot of the times. This right here, is it coming off of a resistance? Again, if we're looking at a bearish order block, we want to see it come off of resistance and we want to see the low get broken. We're coming off of a small fair value gap right here. We are rejecting away. We are breaking the low, and notice how mean threshold got respected right here. No candle close above mean threshold. Then we have another up candle right here. This up candle, is it coming off of resistance? Yes. Did it break the low of this up candle? Yes. The low got broken right here. Did it return to the order block? Yes, it returned right here. Did it respect mean threshold? Yes, it respected mean threshold. Very important for you to understand. Not every order block will hold. Not every order block where mean threshold gets respected will hold. Not every order block where mean threshold gets disrespected will hold. But we have to think in probabilities. These are the highest probability conditions. These are where the odds are in our favor. And how do we select the bearish order blocks right here? We take the bodies. Why? No fair value gap overlapping. Again, if you don't know what a fair value gap is, write that question down and we'll get into it later. Now, if we move on here, we have this new order block, right? New up candle, new order block. Low gets broken, a return to the order block, the wick right here, empty gets respected, and we see a new rejection away. Now, what do we create right here? A new bearish order block. Is it as simple as this? Well, yes, it can be. Will it always be as simple as this? No, an order block will fail sometime. Now, spotting a high probability order block and spotting a low probability order block is something we'll get into later. For you, it's important to now go over your own charts and seeing which order block holds and which order block fails. By doing this, you will train your own brain, you will train your own eyes, you will train your own intuition, which is very important because then you're developing your own edge. Just by me telling you these steps will not help you. You have to do the work on your own. I'm just giving you the guidelines to get you to actually start the work. Now, again, this is an order block. Why? It's coming off of previous resistance in the form of this order block. The low got broken, a return. The return doesn't have to happen for it to be an order block. Only support and resistance and the high and low. So the first two steps, those two have to happen for it to be considered an order block. All right, now let's take a look at some bullish order blocks as well. All right, perfect. Can you spot the bullish order blocks right here? So let's take a look together. Right here, we have a bullish order block. Why? We're coming off of some kind of support right here in the form of a rejection block. Write that down. Then the high is broken. We see a return. These are all consecutive down candles. So this is one big order block. Mean threshold would be right here. Mean threshold gets respected. What happens after? We create a new order block right here. A new bullish order block. Why? It's coming off of previous support in the form of this bullish order block. Then we create this new order block right here. Then we create a new order block right here. And here we create a new order block. This order block fails and we have a big rejection to the downside and then a continuation up. Now, what does this create? Some form of new order block, right? Now, what happened here? This order block gets respected. Mean threshold gets disrespected and we still continue higher. We had this order block fail. Mean threshold gets disrespected right here. What is happening? The market is wrong. Surely I'm doing something wrong, right? No, not every order block will hold. Like I said, not every time a mean threshold will get disrespected and the order block will fail, but we are working with probabilities. And that's what a lot of people forget. A lot of people forget that we aren't working with probabilities. So after a loss, after something doesn't work once or even twice, they will look for the next best thing, something that will guarantee them 100% win rate. And that's why a lot of people got into smart money concepts and into ICT in the first place, right? A lot of people got into smart money concepts, into ICT. Why? Because they thought it was the answer to everything. And in some way, the market isn't random, but if you are seeking for that, just be very conscious of the fact that you might be searching for that holy grail. Because why a lot of people got into ICT and smart money concepts in the first place is because they thought it was the holy grail. And let me tell you, it isn't. And you will still take losses and things will still fail. All right, let's continue right here. I just want to touch on this last little order block right here. This order block right here. Do we take the wick or the open of the order block? There is a fair value gap right here, but the top of the wick isn't overlapping with the fair value gap. So take the body. study this price action that's coming up. Study this price action on your own. Until Friday, I want you to study and focus on order blocks. So Wednesday and Thursday, focus on order blocks, order blocks, order blocks, order blocks. Which down candles are holding, which up candles are holding, why are they holding, what's happening beforehand, on which time frame are they, did mean threshold get disrespected, did it get respected, what happened, are we very high, are we high in premium, are we low in discount, what is happening, notice the patterns, etc. Use the journal that was provided in the intro video and note all your discoveries. If you truly master order blocks, then I want to thank you, and that's the end of the A to Z guide for you. Because order blocks alone could make you profitable. On that note, I'll see you in the next video on Friday, and I want to thank you for being here. All right, thank you.